Hello dear students, welcome to the third session on the chapter Dissolution of Partnership Firm. Here in this session, I am going to take up the second question of this chapter. Let me read the question now. X, Y and Z sharing profits and losses in the ratio of 3 is to 2 is to 1 had their balance sheet as on 31st March 2015 as follows. On the asset side, we find cash, stock, datas, furniture, plant, goodwill and Z's capital. On the liability side, creditors, bills payable, X loan, reserve fund, profit and loss account and capitals of X and Y. The firm was dissolved. The amount realized was stock 1,22,000, datas 3,05,000, furniture 42,000, plant was taken over by X at 1,80,000. Realization expenses amounted to 6,000. Prepare realization account, partners capital account, X loan account and bank account. So this is the present question. Let us analyze what is the main difference we have in this question when compared to the previous questions. Okay. So now coming to the first difference, here the capital balance we have in case of two partners in the liability side, one partner's balance of capital is given in the asset side. It simply means that two partners, that is X and Y, they are having credit balance in the capital account, so that is why it is given in the liability side. But coming to partner Z, he is having debit balance, so that is why it is given in the asset side. So when we prepare the partner's capital account, usually the opening balance will be written in the credit side by balance brought down. In this question, in case of X and Y, we are following the same rule, but in case of Z, we have to write in the debit side to balance brought down 56,000. Okay, that is the main difference we have here. And coming to the other difference here, we find X loan. X is a partner. He had advanced loan to the firm, so it is not an outside liability. So other than that, it is almost similar to the previous question. So now coming to the ledger accounts to be prepared. In the first step, we are going to prepare the realization account. In the second step, partners capital account. Third step, X loan account. Fourth step, bank account. Coming to the first step, that is realization account, we need to pass in total 9 entries depending upon the informations given. So first entry will be for transferring all the realizable assets given in the books to the realization account at their respective book values. So let us identify which are the realizable assets in the asset side. Cash, it is not a realizable asset because it is already in the realized form. Cash or bank balance, it should not be considered. Okay. Then stock we have to transfer datas, furniture, plant and goodwill. So these are the realizable asset which we have to transfer to the realization account at their respective book values, that is 1,55,000, 3,20,000, 50,000, 2,10,000 and 39,500. So let me show you the realization account. In the realization account, the entry will come on the debit side: 2 stock account, 2 datas account, 2 furniture account, 2 plant account and 2 goodwill account. So first entry is done. The second entry is for transferring the provision, specific provision against any asset, but we don't find any provision deducted from any of the assets in the balance sheet. So that second entry does not come. The third entry will be for transferring the outside liabilities. On the liability side, we have to identify which are the outside liabilities. Here we find creditors and bills payable. As I just now told you, X is a partner, so whatever the loan advanced by him, it is not outside liability. So we have only two outside liabilities, so that must be transferred to the realization account. We are going to make the entry: by creditors account 2 lakh, by bills payable 50,000. Okay. The fourth entry will be for realizing the assets. It is given that the amount realized as follows: stock they have realized 1,22,000, datas 3,05,000, furniture 42,000. So these are the three assets which they have realized. So the asset is going out of the business and you are realizing the money, so the cash comes into the business. So what is the entry you have to make? Cash account data to realization account. So in the realization account, you have to write by cash or bank account. Below that, you have to write down what are the asset realized along with the realized amount. Stock 1,22,000, data 3,05,000, furniture 42,000. Okay. So the total amount realized was 4,69,000. The next entry will be for any of the asset taken over by any one of the partners. So here it is given that the plant was taken over by X. There was plant, but it is not realized by the firm. It is realized, it is taken over by one of the partners. Who has taken over? X has taken over for 1,80,000. So instead of writing bank account, you have to debit X capital account. So here in the realization account, X capital account data to realization account, plan taken over at 1,80,000. Okay. The next entry will be for paying the outside liabilities. Here it is not given whether they have given any discount or not. So we are going to pay the full amount. So the entry will be realization account data to cash or bank account. Creditors 2 lakh, bills payable 50,000. Okay. As I told you in the previous question also, for paying the expenses, make a separate entry. So the next entry will be for paying the expenses. It has come to 6,000. So again the entry will be realization expenses, sorry, realization account data to bank account. Okay, to bank account. Here below that you have to write expenses paid, amount is 6,000. Amount is 6,000. So 2,50,000 will be shown in the previous entry. Here you have to show 6,000. After this we are going to close the realization account. Here we have debit side more when compared to the credit side. Same total will be written here. When you deduct these credit balances, you have balancing figure of 1,31,500. So which represent realization loss. So this will be transferred to all partners capital account in the profit sharing ratio. It is given that they were sharing the profits and losses in the ratio of 3:2:1. So for first partner 65,750, second partner 43,833, third partner 21,917. Okay, the first step is completed. Now coming to the second step, that is preparing the partner's capital account. As usual, first we are going to write the entry for recording the open capital balances as given in the question. As we just now discussed, two partners have credit balance, one partner has debit balance. So in the capital account, by balance brought down, X 2 lakh, Y 1,50,000, Z dash. In the debit side we have to write 2 balance brought down, Z's debit balance must be shown here 56,000. Then the next entry for transferring the reserve fund, there is 1,20,000 which will be distributed in 3:2:1 ratio. So by reserve fund. Then there is also profit and loss account credit balance. This will also be credited to partners capital account by profit and loss account 30,000, 20,000 and 10,000. After this we have to transfer the realization loss. Here we have made the entry partners capital account data to realization account. So in the partners capital account we have to write to realization account the loss on realization transferred. The next entry for plan taken over. So here X capital account data to realization account. So in the capital account we have to write to realization account. The agreed value of the plan taken over must be debited to X capital account. So no other entries. We are going to close the capital account one by one. In case of X, credit side is more 2,90,000. Same total is written here. After deducting the plan taken over and realization loss, still there is balance of 44,250 which represents surplus capital. Okay. In case of Y also, total of credit side is more 2,10,000. Same total is written here. When you deduct the realization loss, there is a balance of 1,66,167. But in case of the last partner, debit total is more 77,917. Same total is written here. When you deduct 20 and 10,000, so the remaining balance would be 47,917 in the credit side. So these two balances shows represent surplus capital, so which will be paid off to the partners immediately at the time of dissolution. So the entry will be partners capital account data to bank account. Then this balance shows a deficit or shortage, so much amount partner Z has to bring in. So the entry will be bank account data to Z's capital account. Okay. So that is regarding the second step. Now coming to the third step, X loan account. Here it is given in the balance sheet. X had advanced loan of 60,000. Loan is a liability which represent credit balance. So we have to write by balance brought down 60,000. Now when they are going to pay off, the entry will be X loan account data to bank account. The same amount 60,000 is paid off. The last step, we are going to prepare the bank account. So first we need to check what is the opening cash or bank balance. Here they have given 9,500. So we have to write it as a opening balance, to balance brought down. After this we have to check in the realization account what are the bank or cash related transaction. So this is the one for realizing the assets. So here we have passed the entry bank account data to realization account. So in the bank account we have to write to realization account. The next entry for paying the outside liabilities, realization account data to bank account. So in the bank account we have to write by realization account for paying creditors and bills payable. One more entry for paying the expenses here. realization account data to bank account, in the bank account realization account 6,000. The next entry in the partner's capital account. So before we make the entry for settlement of capital balances, we have to write this X loan account data to bank account. So in the bank account we have to write by X loan account. Then now coming to the final settlement of capital. So these two partners are paid off. The entries X capital account data, Y's capital account data to bank account. So in the bank account by X capital account, by Y's capital account. Then here so much amount partner Z has brought in. We have passed the entry bank account data to partner's capital account. So in the bank account to Z's capital account. Okay, 47,917. After we write all these entries, bank account tallies at 5,26,417. So whatever the discussion we have done about the solution is correct. Okay. So now let us take a few more questions in the upcoming videos. That's it for this session. Thank you for watching.